you. All right. And I also wanted to bring my special guest. This is my son, Idris. So everyone say hi, Iddy. Say hi. Okay. I just wanted to, since this is SheFi and this is about being more inclusive in the crypto space, we don't have a lot of people who bring their children to events. Crypto is not always the most child-friendly space, but my son is 8 months old, and I will say this industry is very fun to work in with a young one. So I wanted to start normalizing, bring your child to work and being more inclusive of families in our industry. So, all right, Iddy. And we're gonna pass Iddy off now. It's a little hard to juggle him with slides. So thank you, Jessica. Bye, Ids. So if you want to meet him later, he'll be around. He's very snuggly. Does not know much about crypto, but he's learning. And I will say, he has an ENS domain. It's iddy.eth. He owns some shitcoins and a lot of crypto dick butts. So he is a based baby, which we are excited about. All right. So Maggie wanted me to come and talk to you guys today, and I was thinking about what should I talk about? And today you're gonna hear a lot about the digital world, what's happening in digital space, and before I got into crypto, I actually worked in the oil and gas industry. And so today I'm gonna talk about the intersection of what we're doing here, which is about bits and bytes, and the world I worked in before, which is the world of atoms. So hopefully you're nerds. I see some nerdy looking people, or people I know are nerdy. But we're gonna try to merge together some of these themes and walk away with kind of an investment thesis on what the next few decades might look like and where the opportunities at this intersection are. So does that sound good? Yes? Okay, let's do it. All right, so who run the world? Girls, okay, but also who actually runs the world? The world has changed a lot in the last decade. So when I left college in 2009, I went into the oil and gas industry. 13 years ago, old, the largest companies in the world were all oil and gas companies, resources companies, and banks, right? And if we look at what's happened in the last 13 years, now the largest companies in the world are tech companies, they're digital infrastructure companies, they're semiconductor companies. As of 2 months ago, right? We have TSMC and NVIDIA actually just crushing. NVIDIA is now close to being $1 trillion company. But we also see a huge amount of financialization, right? The stock market used to be much smaller. Now we have numerous companies that have annual revenues that exceed the GDP of most G20 economies. So think about that. That's absolutely insane. So technology is radically reshaping the distribution of capital, of wealth, but also power. And power is very important. So we're gonna talk about power a lot. So who run the world? Girls. So the digital world is really the next frontier, and we're all trying to carve out space in this digital world. In the physical world, right, we're moving atoms. We have these physical things, we have infrastructure, we have a lot of CapEx or capital expenditure. In the digital world, we're not bound by those constraints. So as our lives are increasingly digitized, the question is, who will capture the value that gets created in this digital world? And that's a lot of what we talk about in our industry. The other thing I want to talk about, and where the superpowers component comes in, is we really do live in a multipolar world. And historically, wealth, right, has been, and power for countries, has been dependent on control and command of atoms, of physical resources, these inputs that we use to fuel modern life. But the world is rapidly changing. Countries are no longer the only superpowers. Iddy agrees, by the way. He agrees with that. The world is changing, and as I said, there are now corporations that command more capital, more resources than countries. So we have the advent of what I like to call corporation states. You have Apple, Alphabet, Meta, Amazon. These companies control our lives from the moment we wake up to the moment we go to bed. And if you wear an Oura Ring or you use Siri or any of these digital voice assistants, they're with you even when you're sleeping. We have virtual worlds. Does anyone interact in virtual worlds like Roblox or anything? Yeah. I spend a lot of time in Animal Crossing New Horizons. That's my favorite virtual world. I like to fish, it's great. But we also have these things we call public blockchain protocols. And for the first time, we have communities of people online who have some of the things that might have historically defined a nation state. We have a shared identity, we have resources that are allocated to and controlled by these protocols, and we have collectively a tremendous amount of political and social power. And so this world is rapidly becoming very complex. And so here's my take as an investor. The world is changing. Can we all agree the world is changing? Yes. Okay, we're moving from physical world to digital world. But what does this mean? Where is the alpha in this digital future for all of us? Because we want to make money, we want to allocate our time and our energy to those things that are actually going to move the needle. So here's my take. What will make the future possible is not just bits and bytes, it is also atoms. The future is about energy, compute, connectivity, and storage, and digital currency, whether that is crypto money, but also digital currencies of all types that facilitate and enable value exchange. So these vital resources that will fuel our digital economy are also going to be secured by strong cryptography. So the cryptography component here is very important. So this is what the future is about in my view. So we're going to quickly run through some practical ideas from where you might start looking if you're looking for interesting ways to leverage this shift. So bits and bytes still require atoms is another important point I want to make. So everyone always talks about like the metaverse, and it's this really cool idea that we're all going to live in this incredible digital virtual reality. Guess what? Not fucking possible without trillions of dollars of investment in better physical infrastructure. We need a lot more semiconductors, we need a lot more energy, we need a lot more connectivity and bandwidth, we need a lot more storage, we need a lot better rendering capabilities. And so this incredible digital future we talk about is absolutely not possible without atoms. So we need to start talking about and taking control of the flow of atoms in our world, not just bits and bytes. If anyone wants to talk about buying a power plant or an ISP, I'm here, I'm game, I am down. I do not know why no protocol treasuries have actually started dominating the physical infrastructure layer yet, but I think that will be very important to establishing some form of sovereignty and actual control for this industry. So more technology means more energy. The tech sector uses a ton of energy. We like to talk about, energy is this finite resource. Well, I have exciting news for you. There is a giant nuclear fission reactor in the sky. It's called the sun. We're currently not capable at harvesting all of the sun's energy, but there really are a tremendous amount of alternative energy sources that are coming online in the form of nuclear, other energy sources. And the reality is if we want to live in a digital society, if we want to live in a technology-enabled society, we need to use energy. That is the course of human progress. And so this narrative around reducing energy utilization, not using energy, is kind of a ridiculous narrative because you have to use energy. There needs to be electricity flowing through a chip somewhere in order for anything to happen in the digital world. So if we look at this, the tech sector is using a ton of energy. The blue bars are Facebook, the orange bars are Google. I couldn't put Amazon on here. You know why? Despite Amazon being a ESG stock, AWS has never published any data publicly about energy utilization in their data centers. Latest estimates are anywhere to 2 to 3% of all electricity produced in the United States of America is utilized by AWS data centers. So just think about that. And people talk about Bitcoin like lighting the ocean on fire. Come on, guys, let's get real. So the source of this is mostly fossil fuels. My chart here, for some reason, did not populate, but it would show you that over the last 40 years, the dominant source of these atoms, this fuel that is fueling this digital future, that's fueling data centers, that's fueling electrification more broadly, hasn't primarily been renewables. It's primarily been fossil fuels in the form of oil and gas and coal. So that's a reality we need to contend with. So what are we going to do to get more energy? We have new models for how we produce, distribute, and allocate energy. And guess what? Some of them can use these open blockchain primitives that we're building. So we have new energy sources. What you see here is the Oklo powerhouse. Oklo is a company that uses spent nuclear waste from commercial facilities and creates microreactors or small-scale modular reactors that can generate anywhere from 1 to 10 megawatts and are self-contained, sort of containerized solution that you can plop down, powers anywhere from 10 to 100 houses for 10 years. Very cool. So SMRs, if you're into it, very cool innovation. We have this new idea emerging around virtual power plants, VPPs, and in crypto, we're sort of expressing this through this idea of DPINs, or decentralized physical infrastructure networks. But what's really cool here is if you think of the Tesla Powerwall, right? These are things people install in their homes to offtake as a battery the solar energy that they're producing with their Solar City solar panels. What people are basically doing, what companies are doing, is creating virtual power plants where those resources that are disaggregated around a bunch of different batteries can now act as one utility, one massive global utility that people can draw power from. So we're facilitating the aggregation and trading of these atoms through this new physical infrastructure coupled with these new technology protocols. And there are some really cool projects in the crypto space that are actually building virtual power plants using underlying blockchain infrastructure. So bits and bytes and atoms, best friends. And then lastly, there are really interesting grid management tools emerging to sort of help balance load, and we see a lot of this in the Bitcoin space. So energy. Let's talk about compute and connectivity. Same picture as energy. We shipped over 1.1 trillion semiconductor units in the year 2021. It's a lot. And the compound annual growth rate of the semiconductor space has been 9% over the last 50 years and continues to grow. I haven't run the updated data since the AI craze has taken off, but I think NVIDIA's market capitalization will tell you the numbers are probably up and to the right. And then if we look at demand for connectivity, mobile data traffic is doubling every single year. We consume a ton more bandwidth, we need a ton more bandwidth. And our current computing and connectivity infrastructure is not growing quickly enough. Half of the world is online today. There are another 3 to 4 billion people that are still going to come online. And so we need at least 1,000x increase in collective computing capacity. Where is this going to come from? Well, just like we have new models for energy, we also have new models for compute and connectivity. And you've probably seen some of them. There are new types of semiconductors, optical chips that use lasers instead of a traditional transistor, graphene chips that use different material inputs than traditional semiconductors. There are in fact even a lot of companies that are looking at the ZK space and building ZPUs, or a ZK processing unit, or ASICs to do Bitcoin mining using some of these new technologies that are more energy efficient, but also much more high powered. We have edge computing. There's a really cool company that historically has done containerized Bitcoin mining using flare gas or stranded natural resources like gas and mined methane. They're now actually building mobile data centers with an AI company to use these containerized solutions to do edge computing. So if you have energy being produced in a place where there's no natural consumer, pop a data center down there, do a bunch of linear algebra or run an LLM, and boom, you're making money. And then lastly, mesh networking is another exciting area. We saw a huge wave of different crypto networking protocols like Alethea, Helium, et cetera. These are all early primitives, but I think there's a lot of potential here around making bandwidth and connectivity a tradable, financializable resource. So all of these data centers, transmission lines, and this networking infrastructure is going to cost trillions of dollars to upgrade. So there's our alpha. Anytime we're throwing trillions of dollars around, I think we should find a way to get into that room, enter into that conversation, and see if there are things that we are building that could actually be utilized here. And then lastly, I'm a Bitcoin maxi at heart. I know that's a pejorative term, but I do love Bitcoin. It's how I got into this industry a decade ago, and it's what still fascinates me today. But Bitcoin is just money backed by energy and compute, which is pretty fascinating. So Bitcoin isn't just a way of moving monetary value across space and time. It is a telecommunications network and a database that can help fuel a renewable energy revolution. Hi, Eddie. Look at my sweet baby. All right, so we need to look beyond cryptocurrencies as an investment category and start thinking of digital currencies as a powerful catalyst to fuel changes, not only in finance, but in compute and connectivity, energy, cybersecurity, and ultimately, I think we will have nation states spending trillions of dollars to secure access to public blockchain infrastructure. Again, when we throw out the words trillions of dollars, Those are rooms we want to be in, conversations we want to be a part of, and topics we want to understand. And so I'm almost done here. I know I've talked a lot. Oops. All right, so crypto primitives can change economics. I'm gonna put my slides online. There's a lot of words here, but basically what we're trying to do is create different models around ownership, value creation and value capture, participation, and customer acquisition. And so peer-to-peer networks combined with some of these token models we're building actually have the potential to reduce cost structures by an order of magnitude that centralized companies can't compete with. So as I said earlier, we have protocols with multi-billion-dollar treasuries. Let's go buy power plants. Let's go buy internet service providers. Let's go buy data centers. I think actually starting to invest in and facilitate things in the physical world is really important and is really a complement to what we're doing in the digital world with bits and bytes. So here's the larger opportunity at scale. Today, the market cap of crypto is around $1 trillion. And we might think that's a lot of money. It's not. It's not really. Apple alone is a $3 trillion company, one company. So we got a long way to go. But if we look at the broader range of asset classes, right? Infrastructure today, $5 trillion category, growing rapidly. Debt, non-sovereign and sovereign debt, over $100 trillion category. Equities, around $110 trillion globally. That's all stock markets in the world combined. Real estate, $200 trillion asset class. So this isn't just about crypto itself. This is starting to embed public blockchain infrastructure into some of these other investment categories to facilitate some of this investment that is going to be needed. And that investment is going to come in the form of electrification of parts of the world that haven't been electrified before. It's going to come in the form of digital infrastructure, connectivity, compute capacity. It's also going to come, by the way, in the form of investment into public goods, into institutions that help allocate this capital and deploy it in an ethical and productive way in our society. So a lot of opportunity, regardless of where you sit in the ecosystem. And so lastly, I'll just say, we have done this before. We have literally done this with the Bitcoin network and the Ethereum network. We have built multi-billion-dollar protocols that utilize a tremendous amount of compute and energy and have facilitated investment into billions of dollars of physical infrastructure. That is literally what proof of work was. With the migration to proof of stake, Ethereum has a new and very interesting, more digital value chain, but there's still physical infrastructure at play. But we've done this before. We know how to do these. We know how to coordinate as an industry to create incentives to start to solve some of these bottlenecks around investing in this infrastructure. And so I hope that you will now sort of be red-pilled or orange-pilled on this idea of what the next few decades of investing might look like and where some of the more interesting opportunities might be. So if the 2010s were about energy, industrials, and banking, right now we're in a world that's all about digital services, semis, and new forms of energy. And I think that as we look at the next decade and the decades ahead, the winners are going to be companies in the energy space, and the compute and connectivity space, and digital currency space. And again, there's a huge opportunity here. A lot of capital is going to be spent because this is all new. People need folks like people in this room to explain and to help build these systems and tools. And so I hope you'll join me in this wild future. Oops, my last slide was really cool. It was a picture of a ship, and I wanted to see if anyone knew what this ship was. Thank you, Maggie. It's a fun last little nugget to leave you with, because we talk a lot about nation states and building physical infrastructure on land, but we be putting infrastructure on ships, y'all. All right, let's see. Can we get it up? Okay, so if anyone wants to hazard a guess of what is on this ship and who owns it. We're waiting, we're waiting. Dance, Itty. All right, my son is dancing. Go, Itty, go, Itty. Hi, buddy. He's great. Okay, so what do you think is on this ship? Just throw some ideas out. Don't be shy. We're all friends. What, mining rigs? Okay, what else? Other thoughts? Mining rigs? Cloud computing, so data center, you think? What do we think? This is a data center ship. Do you know what's cool about the ocean? international waters, there is no jurisdiction, right? So this is actually an idea from the book Snow Crash, if you remember, right? The metaverse is rendered, and all of the data center that's like fueling this metaverse in Snow Crash was on a ship owned by this billionaire floating around in international waters because there was no jurisdiction. So Google fucking built that ship. That's so cool. Do you not think that is crazy cool that we're literally living in a future that was written about 50 years ago? I think it's absolutely rad. I'm very excited about it. If anyone owns a large ship and wants to put a data center on it, I am so down. So the future is going to be wild. I hope that you will dig in and look beyond just the crypto and financialization aspects and start looking at atoms as well as these bits and bytes we talk about. And if you want to talk about infrastructure, energy, compute, I'm here. I'll be here for a bit with Lil Idris, and thank you so much for your time today.
Questions? Does anyone have a question for Meltem about what you just heard? Or is it too early in the morning? Ooh, we have one. Okay.
We got time. That was cool. That was a great talk. Yeah, that was really great. You mentioned Oklo. Is that the small nuclear reactor company that Sam Altman just took public?
Oklo's not public yet. The company he invested in is called NuScale, N-U-S-C-A-L-E. Oklo is run by a couple of MIT grads. They just got approval, and their first units are going in later this year, later 2023, like Q4. But Oklo's a different company. Oklo is actually named after a naturally occurring nuclear reactor in nature. It's found, I believe, on the Ugandan plain, but there is a naturally occurring nuclear reaction in the Earth's soil in this place called Oklo, so that's what they named their company after. But yeah, SMRs, or small modular reactors, as you alluded to, are a huge investment category, and I think a very exciting area for innovation. So SMRs, y'all, get hyped. And Oliver Stone just made a great movie about nuclear energy. You should watch it. It has an amazing woman in it, Isabel Bemeke, who also just had a baby. We're kind of twinning in that regard. But she's the first nuclear influencer. So she built a whole online following. She used to be a model and decided she really cared about nuclear energy and starting to change public opinion around nuclear energy. So she's the world's first nuclear energy influencer, which, again, hype as fuck. Like, less Instagram people selling skinny tummy tea or whatever they're selling, more influencers on Instagram selling energy and these novel, innovative ideas. That's my view. What do you think, Ids?
Hey.
Oh. He has nothing to add.
One more. This is the best presentation I've seen in this space. Thank you so much. The whole thing. Consumer applications. You didn't really talk about that. I'm wondering what you think might be worth investing in or paying attention to right now when we think about the commercial side and consumer side of apps.
Yeah, and I think this is why infrastructure generally is tough for a lot of people, because it doesn't really lend itself to consumer-facing apps very well. A lot of what I talked about is really the underlying plumbing. It's not necessarily related to the distribution side, which is controlled more by the existing sort of utilities and providers that we have. But I think we're starting to see some changes to the demand satisfaction side, not just the supply curation side. And I think, again, this is where one of the biggest challenges for decentralized physical infrastructure networks has been. They're really great at aggregating supply of resources, but they haven't really been able to build up sustained demand. I think if you look at the network statistics on helium, right, there's a ton of supply of helium networking capacity, but there is very, very low demand, not a lot of bandwidth being consumed by paying users. So that's a big challenge. This is where I think actually cool opportunities partnering with existing infrastructure providers that already have the client distribution relationship, because building and setting up those new relationships, very heavily regulated, very dependent on last mile infrastructure. But we're starting to see more interest from existing energy companies, from existing compute and connectivity providers. So I think the channel there will really be partnership. But again, the challenge is, right, a lot of people are trying to approach this from a consumer lens, but that core infrastructure really isn't there yet. And the crypto consumer experience, by the way, sucks. So we have a lot of work to do just to make the crypto consumer experience better. So unfortunately, I think that is a huge issue, but I'm excited to see more people from the infrastructure space coming into crypto over the next decade, so we gotta help pull them in.
Nice. I'm at LivePeer, so we're on the supply side of infra, but also trying to get demand, so it's hard.
Love LivePeer. Was one of the first investors back in 2017 with DCG. We love you guys.
Thank you.
Okay, I think that's all we have time for questions. Thank you so much, Meltem. Amazing presentation.